Hey, what is up everyone, and welcome back to a new YouTube video. And this video is going to be a game changer for many of you because in this video I'm going to simplify one of the most it's easy, but a lot of people find it complex and it is actually bias. Most of people they cannot understand where the market is going. So this video is really going to change it for you. It doesn't matter where the market is going, even in a bullish market or in a bearish market, this thing is gonna work. Also, you don't have to understand where the market is gonna, where the order flow is, or where the market is actually going. Uh, but with this strategy and with this concept, actually, you will understand for a short period of time that where the market is going, and you can just get a trade in that short period of time and be done. Alright, so let's jump straight into it. Okay, so basically, this strategy is, or this concept is the ERL to IRL, external range liquidity into internal range liquidity. Now, if you don't know what external range liquidity is, it is basically a high or a low, right? So just like this one, so this is a high, right? And this is a low. This is what external range liquidity is. And what is an internal range liquidity? Internal range liquidity is actually a fair value gap, like this one, for example. So a fair value gap is internal range liquidity, while external range liquidity is any high or low, right? So basically, what we are going to be focusing on is the cycle up external range liquidity into internal range liquidity. So when price takes out external range liquidity on any time frame, okay, now keep this in mind. This is applicable on any time frame. It works on the M1, it works on the M15, it works on the weekly, it works on the monthly. Whatever chart you want to look at, it is gonna work. Okay. So once price takes out external range liquidity, then you want to look for a fair value gap or IRL, internal range liquidity, after that ERL is taken out. And that is what your bias is going to be. But there is something more to it that isn't talked much, and I think it's very necessary. So I'll discuss it later in this video. Okay, so once price takes out external range liquidity, you are just gonna be waiting for the market to go into the internal range liquidity. Okay, and this is literally it. Okay, like it doesn't matter if the market is bullish, it is still gonna come back into IRL. And vice versa. So if I invert the scale, you can see that uh, in even in a bearish market, this is gonna work. So if market is bearish, it doesn't matter, price is still gonna go into internal range liquidity, and I'm going to show you examples of it after this, right? But there is something that isn't much talked about, and that is the confirmation of it. Like market can just continue to go up like this, okay? And maybe it is gonna create a new fair value gap. So if you were going to short it from here to here, you're gonna end up losing, right? So this is something that I'm going to discuss in this video, and it is related to structure. So let's head into the example. So first example here is NZDJPY. So look at this. This is external range liquidity, which is taken out, as you can see. And then what do we have here? There is internal range liquidity. Now look at this. This is what I've been talking about. Price takes out external range liquidity right here, but still, like, look at this. Price just continues to go higher. See, price is going higher. So if you tried to short it from here, you would have ended up losing, right? But there is something to it, and that is actually confirmation of structure. You need to have confirmation from the structure that yes, price is gonna go into IRL. Now let's get into how we are going to confirm it. So I'm gonna go into a lower time frame chart, which is the 4-hour chart in this case, since we are looking at a weekly ERL to IRL cycle, right? So this is that fair value gap, and let me make it something like this. Okay, so market's still going on. We are not gonna short it here. It is only gonna be confirmed if we see an intermediate term high put in. So still going on, as you can see, right? Still continuing to go higher. Now look at this. We have a market structure shift here. Now once we do have a market structure shift, we are going to be waiting for a red on a short-term high. It's still not enough to uh, consider a move into IRL. So what I'm going to do is to wait for the market to put in an intermediate term high. So let's move on and see how it is going to roll out. See, we still don't have any intermediate term high put in. So no, I'm not changing my biases. Okay, here we got an red on a short-term high, right? So this can be our anticipated intermediate term high, right? So a red on short-term high and it expands lower. This suggests that market is actually bearish. Okay, this suggests bearish order flow. So now let's see how the price rolls out. Okay, it didn't touch it, right? So now most likely this is gonna retrace. So look at this. This is just generation of liquidity. So we have these equal lows right here so that the market can later take it. Price is retracing. Another high red, right? A break lower. And if I were to enter in this second leg, I would have entered right here on the break of this. We get this opportunity as well. You can see that there is a fair value gap right here. And it is still not tagged. Okay, more generation of liquidity. And finally, we have it. So look at this cycle once again. We take out external range liquidity, but we still continue to go higher. Then we have a market structure shift, a red on a high, and then expansion lower. Now this suggests that now we are in a sell program on the 4-hour chart, right? And then you can clearly see how it delivers. After that, if we look, we have another ERL to IRL cycle in between here as well. We have this low right here, and we have this low right here. These are taken out. Then we have uh, these fair value gaps, which are the internal range liquidities here and here. So you can see how price goes back up to them and then continue to go lower into the external range liquidity. Now if you go into the M15 chart here, I won't do it right here, but you can check it. As I said, this strategy is gonna work on any time frame, so you can check it for yourself. If you go into the M15 chart here, and you will see the same kind of fractal here as well, a market structure shaped a red on a short-term high, etc. And then market will continue to go lower, right? Now the next example that we have, okay, let's have a look at the weekly view of it. See? Now, you don't have to care where the market is going to go after this one because your target is already met. It doesn't concern you if market is going to create a new high or if it is just going to go lower, right? So it doesn't really matter now. You already took out your trade and you are done with it. All right, so this is our next example right here, and this is Canadian dollar Swiss franc with the weekly chart. And here is a red on a short-term high, or in this case an ERL, we'll call it an ERL here. There's a red on an ERL here, so we will expect the market to take out the internal range liquidity then, but we need a confirmation. So let's go into the 4-hour chart and do the same thing. So this is that fair value gap, right? This is that external range liquidity. Now let's see how the market rolls out. A move higher, right? So listen, what we are looking for here is a market structure shift first, and then a red on a short-term high. Alright, so we get a strong move here. We can consider this as a market structure shift. And then, so after the market structure shift, what we are going to do is to wait for a red on a short-term high. So let's see if we get that. All right, so we have this high right here, which is taken out, and we are getting expansion lower. Now this is even more confirmed. Uh, Look at this right here. So this is a red on a short-term high, right? And then after that, we got another red on a short-term high, and then a break lower. So red on a short-term high, expansion lower suggests that the sell program is now activated, and we can aim for these lows right here. Now we have an FVG put in right here. Let's see if we get back to that. Yes, the market does get back to that, and let's see how market delivers from now. And here we go. So look into this price action right here. We have this high, which is still respected here. This is an intermediate term high, and we do not want to see this getting breached. And you can see that it is respected. Then after that, you can see that we have another red on a short-term high and expansion lower. Okay, and then finally I move into the IRL. Also, if we look into this right here, this, and this. This is actually another intermediate term high, right? So you can see how clean the price action is. Now, moving into the next example, which is the GBP right here. This is GBP one daily chart, and look at it this right here. This is ERL taken out. Now we have IRL right here, so most likely the market is gonna go into the IRL, but as always we need a confirmation before that, so we are gonna go into the 1 hour chart, which is the low time frame here, and see if we get that confirmation here. So 1 hour chart here. Here we can see that we have this disrespect up. Uh, Alright, so this is the low time frame view of GBP USD on the 1 hour chart, and we can see that we have this fair value gap, which is clearly disrespected, as you can see, right? Now, if we move forward, we are actually now waiting for an intermediate term low. Now, there is a red on a short term low right here. Now, I want an break up this high to confirm that we are going there. And we do get that. See that we have another inversion fair value gap right here, right? So this is still not tagged, as you can see. This is still intact, so you can possibly take an entry from here and place your stop loss maybe right here, but let's see how it rolls out. I'll move into this fair value gap, and there we go, the step. So you can see how easy this strategy is, and this is actually gonna work on any time frame. You can go into the M15 chart and you will see the same fractal happening. You can go into the 1 hour chart and you can see the same thing happening there as well. So do practice this strategy, do back test it, and let me know if you have any questions. I also drop your questions in the Discord community because I'm active there. You will find the link in the description. And if you are not following me on Twitter, you are missing out on a lot. So make sure to follow me there as well. Bye, have a great time, and see you in the next one.